July 26th, 2023, or sorry, 2024. The day, whenever you open basically in the middle of the prior day's range, like we did today, the odds of an inside day are increased. And so you can see we pretty much opened exactly in the middle of yesterday's range. And that increased the odds that today was going to end up being some sort of trading range day. And when you have a trading range day, in general, magnets are the open of the day and the midpoint of the day. So if you look, the midpoint of the day is basically what we oscillated around and ended up closing around towards the end of the day today. I thought, it's pretty interesting how magnets work on higher time frames. Just pull something up real quick. Oops. If you looked at the weekly chart, so whenever it's the last day of the week on Friday, you should look at the weekly chart and look for potential magnets. Magnets on this type of chart, when the day opens somewhere down here, the low of the week would be a magnet, and since that would be for the bears want it to close as strongly as possible. And the bulls, it's too far for them to make this a bull close. So what do they want? Well, they would want the week to close above its midpoint. So, and that was a reasonable target, which would be here, the midpoint of the week. And if you did it exactly out, I did do the exact math this morning to see where the midpoint of the week would be. The midpoint of the week was 55.31, and 55.31 is also the high of this bar. So the exact midpoint of the week was also the high of this buy the close bar, or not good buy the close, but theoretical buy the close bar on bar 45. And that's exactly where we ended up finding, or where we probably would have ended up finding sellers if we got in there. We got close, and then bulls just ended up dumping long. But it's not a coincidence that there's a magnet there on the 5-minute chart, and that's the midpoint of the week. That's algorithms doing that, creating multiple time frames and are multiple reasons on multiple time frames for something, some sort of move to happen, and for there to be sellers in that area. Bar one is a bear bar, but a big tail on the top. There's probably sellers above. Something to keep in mind is we're opening in the middle of yesterday's range, and we had a big sell-off down to, sorry, I have to keep going up and down because I have to adjust for this and then adjust for this. But we had a big sell-off to the downside, and then we had a gap up, and we're now in the middle of the prior day's range. So are we always in long or always in short? You know, it's probably reasonable to make an argument for both. I would say with from the gap, probably always in long, but I wouldn't really argue with you if you said always in short. It's not really that clear for either side is the point, because no one is overly bullish or overly bearish at this point. The market's really neutral. We have magnets below and magnets above. So we're opening in the middle of the day's range of the prior day's range, and we don't have a clear always in direction. To me, you should be really patient on the open. It seems like it's going to be a trading range open. Bar two, a big bull bar, but a tail on the top. So not quite, not really a great location either. If you're buying here, you're buying kind of close to the bar 72 close from yesterday. And there should probably be sellers in that area, since anyone who bought that close and scaled in is going to be disappointed in how that went. And so they'll be looking to sell out here. Are individual traders buying here and scaling in? No, that would be, something an algorithm would do. Bar three, a doji bar. So it's bare minimum follow through for the bulls above bar two or with bar two. But again, it's a doji bar. You're not looking for bare minimum follow through. I think at this point in the day, what you should be trying to do is establish possible highs and possible lows of the day, and look for the trading range, or sorry, look for possible highs and lows of a trading range for at least the next couple of hours. Bar four, a bear bar closing near its low. It's an inside bar, so good for the bears. Inside bar, bear bar closing near its low. It's a possible high of the day, but it's not really all that good. After the gap up, bears hope that the gap up was the first leg, and bars 2 and 3 are the second leg up. Now we're going to get a big sell-off to the downside on bar 4, but it's really not all that worth taking. If we are going to get a big sell-off, it might be more of an entertainment trade. I'm sure that, obviously this is a magnet here, the bar 79 close. I'm sure that if you sold below 4 and you put your stop above, you're risking 10 points and you're trying to make 40 points, and, definitely at least a 25% chance that we get down here. So, but I'm not sure how much higher it is than that. So while if you take that trade in this context 100 times, it probably won't lose you money. I'm not really sure it's going to make you money either. So again, it's not really a trade worth taking. I'm not sure the math is all that great. Bar 5, disappointment bar. So you can see we're probably trying to bounce back up to around the bar 3 close, since we had consecutive bull closes. But buyers below bar 4 during bar 5, not all that surprising. 6, a bull bar, but a tail on the top. Bulls are hoping we have breakout and then a pullback on 4, and then we're going to get good follow through for the bulls above, but it's really not all that good. The daily range is really small. We're probably going to quadruple the daily range at this point. So I really, you're not in a rush to do anything at this point in the day. Again, we're in a very, neutral area and we're getting very neutral bars. So I don't really think there's any rush to get into the market here. I would just rather be flat. Bar 7, a huge tail on the top of bar 7 and a huge tail on the bottom as well. It looks like, we have the gap up and then a first leg up, 2, 3, and then a second leg up, 4 through 7. So it's really not worth doing anything. You can see we went decently above the set bar 72 close, and then we found sellers and reversed back down. So again, am I selling any closes up here? No. Am I buying anything up here? No. I would just rather wait. This is a really neutral area. What am I waiting for? I'm either waiting for a strong breakout to the upside, a strong breakout to the downside, or a breakout to the upside and a failure, or a breakout to the downside and a failure. And then you can trade either the failures or the breakout if the breakout is strong. 8, a big bear bar closing near its low. Good for the bears, but again, this is huge risk now. If you're selling below 8, your stop is above 7, and your risk is really large in the range. It's 20 plus points, so it's really hard to look to sell down here with a stop up here. It's also notable that bars 5, 6, and 7 are strong enough to get a second leg sideways to up. So there's probably buyers not too far below bar 7. And this is a good bear bar, but I'm not really sure how much lower we're going. Bar 9, it bounces up to the bar 7 close and then sells back off. So good for the bulls. This is a good bounce for them. And then we find sellers, and that causes bar 9. Why? Because the bulls who bought here, maybe hoping that we're going to start some sort of upside breakout, are obviously disappointed in 8. No one who's buying this close. Well, first off, no individual trader should buy this close. When I talk about like this buy the close, I'm talking about theoretical management for it. And by theoretical, I mean algorithmic. It's not something an individual trader is going to do, unless they're trading extremely small. But it's just not worth doing. It's better to wait for better trades. So the trader, any algorithm that's buying here knows that this is a very realistic possibility. They're looking to get a really big bounce, but they know it's not going to happen. So they're buying. Their stop probably isn't even here. It's probably a lot lower, and they're scaling in down here, and they'll scale in more and scale in more. And so they might buy here and they'll buy more here, and then they see 9 bounces back to around their entry price. And they'll just take the profit on the second buy, get out around break even on the first, and move on to the next trade. Bar 10, an inside bar. So we have consecutive inside bars, 9 and 10. We're in breakout mode. It's very obvious because it's a tight trading range, but we are in breakout mode. And, when the market's in breakout mode like this, you should probably just do nothing and sit on your hands. An II pattern in general, 50% chance the first breakout, 50% chance the first breakout is going to fail. And, it's notable that we haven't had any closes below the moving average yet today, and we haven't even touched the moving average yet today. So that's pretty good for the bulls. But again, I'm not sure how much is left to either side here. I'm looking for a breakout with follow through. If you look at the daily range so far, it's only about 24 points. And I know 24 points sounds like a lot of points, but yesterday's range was 100 and the prior days was 90. So you figure today is going to at least be 50. I don't know exactly what it was, but the prior 2 days were 90 and 100. Okay, it was like closer to 60, but you figure today is at least going to be 50, and the daily range so far is 25 to this point, or to bar 10, the daily range is 25. So what does that tell you? That tells you that the daily range is most likely going to, at the very least, double. So you don't really have to be in a rush to get into anything here. You should probably just wait and see a breakout, and then you buy the follow through. Bar 11, a bull bar closing near its high, but what is it? You know what I'm going to say? It's a bull bar closing near its high at the top of the trading range. It's a big bar with big risk. Nobody really wants to buy up here. This looks like more of an area where traders who are buying down here for any reason, maybe buying below 7, whatever, some limit order bulls are going to be taking profits up here. There's no way I want to buy this high in the trading range. I would rather wait and see the follow through bar. If you did take the buy, you have to be able to use either a really wide stop and scale in more at the low of the day, or after you see 12, you use 13 to get out at break even. So that's what those traders were doing. And that's part of what's causing 13 is bulls are giving up. Bar 12, it's a wedge. 3, 7, 12 is a wedge. Again, you don't want to buy the bar that has not broken out of the high of the day in this context. It's a big bar with big risk at the top of the trading range. Just, you'll miss trades for sure with these types of rules, but the trades you miss, you're going to find that you would have lost most of them. Yes, you will occasionally miss a winner because everything happens sometimes, but it's not worth taking these types of trades like bar 11 because you're just going to end up, if you can't get out quickly, you're going to end up taking a really large loss and it's not going to offset properly. So anytime that you see a big bar with big risk at the top of the trading range, just leave it alone. Even over here, you don't need to buy this bar 18. It's better than bar 13 or bar 11. I'll get there. And this was okay because we had so many closes above the moving average, but nothing was super ideal in this area. Probably the best looking trade on the day, I think, was bar 12 because you get a bear bar closing near its low. It's a wedge, and if you're a bull here who bought, you're probably C12, and you should be at least thinking, oh crap, I might get trapped here. I need to get out. And if you're not thinking that, that's okay. After today, you probably will start to think that in this context. And it's really hard to learn this lesson. It takes many years to learn this lesson. I harp on this particular thing so much because I used to do it so often. I mean, I would buy this, and then I would say, probably a minor reversal. And then I would see this, and I think, oh my God, now I got to sell. But it's just a big bear bar at the bottom of the trading range. I did that for, at least the first couple of years I was trading. And then you sell down here and you get trapped, and then you're just and then you don't have the heart to buy up here because you've been doing this the whole time and losing. So you're too scared to take any of this, and then it goes, and then it's a frustrating day. I've done that a gazillion times before. So anyways, back to the chart. Bar 12, a bear bar closing near its low. It's a wedge, 3, 7, 12. And it's a doji bar, yes, but the context makes sense. It's a failed breakout above the high of the trading range. And again, if you're selling this, you're thinking it's a trading range. And I think it's pretty obvious that it is a trading range. So you're selling at the lower third, which is fine. Close is close enough. You're selling a bear doji bar at the lower third of the top of the trading range. So you're probably going to get some sort of trap here, and the bulls are probably going to exit. And that's what causes 13 to be so large. 13, a huge bear bar closing near its low. Do you sell below 13? I think it's kind of hard to sell below 13 because the bar is so large and your risk is so big. However, if you are short, you should take a piece off because we haven't broken below the bar 1 low. It's possible this is just an expanding triangle open, which is what it ended up being. But I think 13 made the market clearly always in short. Now, always in short in a trading range is a different thing than always in short in a trend. Here, this is a trading range. This is, trend always in short in here. And this is trading range, potentially trading range always in short. 13 is a big enough bar to make it reasonably possible. We have seen the high of the day. Obviously, that was not the case today. But 13 is a big enough bar for that to be reasonably possible. What do the bears want? They want more follow through and probably to get back towards last week's low, towards the low of the week, which is a very, very reasonable target. However, you have the other side in that the bears who have sold have made, basically 20 points in one bar. I assume they were able to make 20 points if they got out at the very low. They were not able to. Okay, that's interesting. So usually, especially on a day like today, there's at least going to be a 20-point swing. There's probably going to be a 30 to 40-point swing, which there was. I'm curious actually, how much did the bulls who bought above 26 make? So 35-point swing, I guess. But anyways, so you get a huge bar on 13, but now if you're selling here, it's big bar, big risk. So you have to sell really small. And it's probably not worth selling. I'd rather just see if we get follow through. And instead, you get disappointment on 14. So you see 14, and you probably got to be thinking, well, we're probably still in a trading range. 12, 13, pretty strong. But this is, this pullback on 14 is a bit disappointing. We're probably going to get a second leg sideways down, but you just sold really low in the trading range, so it's not as good as it could be. 15, do you buy above 14? It is an expanding triangle, but I would probably not buy above 14. It's not able to close near its high, so it's not all that likely that it's going to end up being a bear trap. 15, disappointing for the bulls and the bears. I think that, if you were short, I'm assuming it probably went past the 50% pullback, it looks like. Oh, no, okay, it went right to it. I thought it went further than that. But you can see, so the bears, they didn't quite want to sell directly below bar 4 or below bar 13, so they took a chance for getting a second leg down, and they sold a 50% pullback of bar 15 during or of the sell-off from 12 and 13. And they ended up doing that mostly for a scalp. I think 16 is really disappointing. It's an inside bar and it's a low one short for the bears, but it's really not that good because it's a bull bar. So we have three straight bull bars, 14, 15, 16. And when you're getting three straight bull bars at the bottom of a trading range after a sell climax, to me, there's going to be more buyers than sellers below 15. So any of the bears who shorted here, who are short for any reason, probably if we get back below here, they're just going to exit their shorts and look to sell again higher, because we should not be getting this deep of a pullback this early in what they're hoping is a big bear trend. And you can see on 17, when we traded below 16, traders bought it immediately. Some bulls looking to scalp on a limit order, some bears looking to buy back their shorts that they sold earlier, maybe at a small loss. And then we got 18, a big bull bar closing near its high. Do you buy above 18? Well, the one thing that I think that 18 has going for it that 12 did not, or sorry, that 11 did not, is that, well, first off, it's a bar 18 reversal, so we're 18 bars into the day, which is important. And second, I think that what was I going to say? Sorry, let me back up. I think that if we were going to go down, 13 was probably the chance for the Bears to go down. So I was surprised. This is a really big bar, and yes, it's still within trading range, but I thought that we were probably going to go at least a little bit lower, and it seems like the Bears are getting trapped. So I thought that if this was going to work, or if the Bears were going to get a sell-off, it probably would have been in here. It probably would not be over here, and then sorry if you heard that. My phone ringer went off. But anyways, it probably would have been over here where we got the sell-off. It probably would not be in here later in here that we're getting a sell-off. So that is something that 18 has going for it. However, it is still a big bar towards the top of the trading range. And the big, another problem is if you didn't get out on 13 really quickly, those traders might still be trapped. So we might get sellers when we get back to the bar 11 high. And that's exactly what happened on 19. If I bought above 18 and I see 19, I would probably just get out of the market. Yes, occasionally you're going to get a big bull bar on 20 and you'll get trapped out and you'll have to buy higher, but I think that's fine. If you bought above 18, this isn't a super high probability trade and your risk is really large. So you kind of have to be, you have to be nervous basically going into the trade, and you have to be really, really quick to make decisions, because I'm not really sure how much higher we're going. 20, a doji bar. So am I buying below 20? No, but I'm not selling below it either. Bears want a double top, 12 and 20, and they are hoping we're going to start a sell-off. Bulls are hoping this is a pullback, so we started a bull trend, and this is a pullback in the bull trend. But I am not doing anything in here. If I am long above 18 and I see 20, I am just getting out of this trade. This is not what you wanted to see. If you bought above 18, you have to have some imagination with trading. If you bought above 18, you have to be thinking you want 19 to look pretty much exactly like 18 and start, just a really relentless bull trend. And you don't get it on 19. And even if you were really patient with this trade and you waited through 19 and 20, you see 20, you just got to get out of the trade, I think. It's not good anymore. It's really easy to see this and just say, well, maybe we'll go up. And maybe we will, but I'm not really sure it's worth it. I think the only way that you can be long, I think at this point, if you bought above 18, is your premise is that we're going to get a measured move up of the opening range back to yesterday's high, which is, the measured move target. Again, not a coincidence that the measured move target up is yesterday's high. But that way, if you have a stop below the low of the day, your premise is we've seen the low of the day. So if you have a stop below the low of the day, you're risking 20 points and you're trying to make 43. And it's reasonable to think the daily range is going to double, because the daily range at this point is only 30 points. So it's very reasonable to think we're going to have a 60-point day. We basically did. So I think that's the only way you can really be long above 18. And if that is the case, if you were long above 18 and that was your premise, you're not getting out, anywhere in the two-legged correction to the moving average. So you're not getting out, 25, nope, pretty much anywhere in there. You're probably just waiting. So 20, 21, a bear bar, but a big tail on the bottom. It's a pullback. Some bulls might prefer to buy a 50% pullback of the move up. So somewhere in here, some sort of support. And we had an expanding triangle open, and then we started to form an actual triangle in here, or not an actual triangle, but I guess a contracting triangle in here. And that was what led to the breakout on 26. So where was I? So 22, another bear bar, but three tails, 20, 21, 22. Might be a wedge on a lower time frame. It's not a sell to close bar. It's not worth doing anything in here. The bulls are hoping that this is all part of a pullback from this rally. And the bears are hoping that we're starting basically getting the first leg. Sorry, let me back up. The bulls are hoping that this is a pullback, and the bears are hoping that bulls are going to give up. Any bull who bought is going to give up somewhere in here, and we might get a retest of the bar 13 close. But I don't think either argument is all that great right now. I would just rather wait for more information. Again, there are always in traders who are trading right now, and I think we're probably always in long on bar 18, but I just don't think that it's all that ideal to be long. 23, a bull bar. Sellers above 22 during 23, most likely, and was not able to close as an inside bar. So your high one signal bar for the bulls is bar 22. And obviously, you do not want to buy above the bear bar that's closing near its low. So less likely we're going to go up since 23 was not able to close as an inside bar. Sellers above 23 during 24. You can see we traded back to the 22 close and found buyers there, and it bounced. But this, to me, possibly just two legs sideways to down, one pullback, and maybe two. I don't really think anything's worth selling in here. 25, a bear bar closing near its low. Do you sell it? I would not. We've only gotten one close below the moving average so far today. Or sorry, we've gotten two on 14 and 13, but really only one bear bar closing near its low that was able to close below the moving average today. So I don't really think it's all that great to sell below bar 25. And then you get an outside up bar 26, a bull bar closing near its high. Do you buy above 26? You definitely can. It's good for the bulls. It's an outside bar. And again, you can take a chance that the daily range doubles to the upside. So I don't think it's wrong to buy above 26 and just say, well, maybe the range will double and we'll get back up to the bar 44 close from yesterday. The context overall is relatively neutral on the daily chart. So it's not, it's nothing crazy. You know what I mean? It's not all that bullish. It's not all that bearish. But again, something that's hard to ignore is we have closed above the moving average on pretty much every single bar so far today. So we're probably going at least a little bit higher. How much higher? Well, you have to keep in mind, obviously this is a magnet. This whole area is going to be a magnet. But we had a spike and then a channel bear trend. And the tops of channels are magnets. So it's possible the 48 high, which is around 55.10, is going to be a magnet. So maybe up here before we pull back, and I think we oscillated around it a little bit in here before we went higher. 27, consecutive bull bars closing near their highs. Good for the bulls. We're probably always in long. How much higher are we going? I'm not really sure. Like I said, 26, 27, good for the bulls. We're probably going to go at least a little bit higher, but I'm not all that sure because 27 is not able to close above the bar 20 high. Ideally, if 27 got a little bigger or it didn't have such an overlapping tail, indicating that bulls were more interested in buying a pullback, if 27 is able to close above the bar 20 high, it's probably a little better. But it's still, we're always in long, and it's consecutive bull bars closing near their highs, and we've had pretty much every close above the moving average so far today. 28, another bull bar closing near its high. So 26, 27, 28, three straight bull bars closing near their highs. We're probably going at least a little bit higher. How much higher? I'm not sure. Again, I still would like to see a breakout, and we're probably still going to double the daily range. 29, a doji bar. So disappointing follow through for the bulls, I think, if you had bought for any reason, because we were not able to break out above the high. So do bulls exit below 29? You probably don't. You definitely don't have to, but it's kind of a difficult position because you're starting to wonder: are we in a bull trend, or are we just at the top of the trading range? But again, the daily range should double. It's okay to be long. 30, a bull bar, but a tail on the top, closing reasonably near its high, and 31, consecutive bull bars closing near their highs. We're definitely going at least a little bit higher. You can buy above 31, taking a chance that we get some sort of vacuum test of the bar 44 close. So you could buy above 31 or 32, taking that chance. Really good for the bulls. But again, this is getting climactic. So I'm not really all that sure how much higher we're going to go without a pullback. With that being said, we are clearly always in long. This is a really strong channel, and it's a really tight channel. So we're definitely going at least a little bit higher. 32, again, it's another buy the close bar. So we have three consecutive buy the close bars for the bulls. We're probably going at least a little bit higher. But the risk reward is not all that amazing at this point because of how high we have gone. So we might get a pullback soon. That's why you get an outside down bar 33. Bulls will probably exit below 33 if we get below it and just wait. And then you can see on 34, we get an inside bar. For the bears, it's an IOI, so it's a breakout mode pattern. It's a low one short below bar 30 or below bar 34 for the bears. But if I'm a bear, I do not want to sell below a bull bar. It's notable that this is probably a trading range day still. It's good for the bulls that we're going a little bit higher. We have open gaps here, and an open gap here. I'm not all that convinced this breakout here, and this gap is going to stay open because 33 is a pretty big bar. It's a bit damaging to the bulls. We might go higher. I'm not sure how much higher, but we definitely might go a little bit higher. But I would have been surprised if we had kept the gap open with the bar 12 high. And so probably, another reason why you could sell below bar 49, looking to make at least, to basically a quick 10-point scalp to the moving average. Your risk reward isn't all that great over here, but you could definitely do it. So 35, an inside bar. So 34, 35, II patterns, IO, II, whatever you want to call it. What's important is that we're in breakout mode. The bulls, they don't want to go below 33. They know that a lot of the bulls are not very excited about the prospect of 33. So they might start to exit longs in this area and wait for a couple legs sideways to down and then look to buy a second leg up from this. What do the bears want? The bears, they probably want a pullback and then, this to turn into some sort of double top, bear flag, and a move down to here and eventually back into the middle of the trading range. What's more likely? Well, this is really strong. So I think we're probably going at least a little bit higher, but I'm not sure how much higher. But again, breakout mode. 36, a bull bar. It tests the bar 32 close during bar 36. And you can see some bulls initially sold out of their longs. So a lot of the bulls who bought here, they bought more down here, and they used the rally on 36 to exit longs. 37 is important as well. It's a bull bar, but there's a huge tail on the top. And what does that indicate? Well, sometimes what will happen here is we rally up to this resistance point and then sell off the first time. And the second time, maybe bar 37, it rallies right through it and we get a bull close somewhere up here. And the bulls who initially sold out of their longs will think, oh my God, it's going to the magnet and now I'm trapped out. And so they'll end up buying as the market's racing up and they'll try to get back in and that'll drive the market up faster. But instead we got 37, another tail on the top, indicating that the bulls were still selling out of their longs. But granted, it's 4 straight bull bars, so there's going to be buyers below 37. We're always in long. We're probably going at least a little bit higher. But that is notable that sometimes on bar 38, you'll get kind of a collapse is a strong word, but you'll get a pretty good looking bear bar, something like, maybe something like 33, because the bulls have tried that at that price. The bar 32, they've tried at that price twice on 36 and 37, and neither time it's worked. So sometimes that'll happen. It's not worth selling. It's not worth betting on. But if bulls decide this isn't going up any higher, we're probably in a trading range. Sometimes that can happen. You can see there are buyers below 37, and we get a reversal up, a bull bar closing near its high on 38. Am I buying above 38? You probably can. I guess it's a high one. We didn't break to a new high on 37, but it's still kind of a high one on 38. It's probably not unreasonable to buy above it, but it's just not all that ideal. The upside is probably somewhat limited, but instead you get the bears giving up 39. That's the bar the bulls wanted. They're hoping we're going to break out reasonably strongly to the upside and maybe get back to that bar 44 close from yesterday. 40, a disappointment bar. So if you had bought for any reason, I think 40 is disappointing. You're hoping you get a vacuum test to the upside, and it doesn't seem like you're getting it. Probably, with that said, traders who sell above 40 and scale in higher are probably going to make money. And the reasoning for that is the traders who sold above the breakout point 33 and scaled in higher on 39 used 40 to make money. So any trader who sells the next breakout above 40 during 41 is probably also going to make money selling above that bear bar. 41, a bull bar, but there's a tail on the top. It cannot close above bar 40. This is really not all that good. And there's not that much left to the upside. We're only, 7-8 points away from the 45 close, which with the ranges that we've been having recently, 7 or 8 points is not very much. 42 consecutive bull bars, but a tail on the top of 41 and a tail on 42. It's really not as good as it could be. I think we're probably going to go more sideways here than anything. We might go a little bit higher and get a vacuum test of the magnet really quick. But again, I'm not really sure. This isn't overly great for the bulls. And then you get 44, a bear bar closing near its low. Do you sell below 44? I probably would not. You're probably going to get 2 legs sideways to down right here for sure. But you don't need to take that short. Bulls are going to exit longs though below 44 if it triggers. And so you can see what a lot of bulls did. They're still taking a chance that we're getting back to this area. And so what they'll do is they'll buy the close of 44 and they're trying to make 12 points and they'll put a stop below 44 and they're trying to they're basically risking 3/4 of a point. So they're risking a couple ticks trying to make 12 points. So that it really only has to work like, 10% of the time to be a really profitable trade. This is one of those times it got close, didn't quite work, but a lot of traders, they get quick 5-6 points on 45, they might end up taking it. So that's one of those trades where it's really low risk and you can kind of just buy the close and see what happens. And that's what ends up happening. Sellers above 45 during 46. It's a bad high one buy above 45 because no one wants to buy above a bull bar with that big of a tail. 47. It's an inside bar. It's a high one for the bulls, but it's really not all that good. I would just be flat at this point. We're probably going to start to go sideways pretty soon. 48, the bulls, they were trying to get up to this area, and you can basically see what happened is they got, somewhat close. Again, think about how less than thrilled you would be if you had bought above this and you just saw all of this. So sometimes what'll happen is it gets, within a couple of points, and traders will be so relieved to just lose 2 or 3 points instead of like 75, that they'll just sell out a little bit before it gets there. And that's exactly what's causing bar 49 to be such a huge bear bar closing near its low. The bulls who bought below 48 are obviously trapped on 49. They were thinking, they knew it's not a good buy below 48 because you have a spike here and then a wedge channel. So 1, 2, 3, spike and wedge channel. So it's probably not worth a buy below 48, but you could probably sell 49. Like I said, taking a chance you make at least 10 points, and then you get a huge surprise down on 50. So 49 and 50 are huge, and they're probably going to dominate a lot of the day. However, you have to keep in mind that this still exists, right? This is still, look at a 15-minute chart. This is still reasonably strong. So obviously this is a clear surprise, but this is still reasonably strong. So do I think we're going to break into a massive bear trend? No, probably not. We're probably just going to be in a trading range. We're also, if you sell the close of 50, you're selling basically the exact middle of a trading range. So if you're selling here, you can do it, but you can't get out in this area. If you're taking a short, you got to hold through all of these reversals up, which is pretty difficult for most traders to do. So if you're going to do that, you have to be willing to hold through all of this stuff. 51, a reversal up. It's if you buy above 51, you're betting on a bear trap, but it's really not very good. I don't even think we reached a 50% pullback. Sell-off was a little too big, yeah. But if you're buying above 51, you're betting this is a bear trap, but it's really not all that likely. The bulls have had a reasonably good move today, and it's not like you're buying super low in the trading range. You're just buying the middle of the trading range. So if you're buying above 51, you're buying the middle of a trading range, betting on a bear trap after something that's really strong and is going to get a second leg. So it's really not worth doing. 52, a big doji bar. It's a low one short. So if you were short for any reason in here, this is a low one short for you, but it's a bull bar. There's probably low ones generally lead to deeper pullbacks and then trend reversal, then trend resumption. So they generally lead to deeper pullbacks and then trend resumption. And you can see high ones will do this a lot. We ended up pulling back to 1 tick above the bar 52 high during bar 57, and then got a wedge reversal down. So oftentimes, if you're selling the high one or the low one, which you don't want to sell below a bull bar, but if you theoretically were to sell the low one, you need to have a stop up here. So that's something to keep in mind a lot of times in bear trends and bull trends, is that the high ones and low ones you oftentimes need a wide stop on. 53, a bull bar closing near its high. It's a higher low double bottom with 51, but it just looks like a second leg up. Am I buying above here? No, it just looks like you're buying the middle of a developing trading range. It's really not worth doing. And you get disappointing follow through on 54. So yeah, we have a couple of good bull bars, but we're still always in short. 49 and 50 is still the overwhelming feature right now. 55, a bear bar, but it's a doji bar. It's not really worth doing anything. Like I said, it's a double top with 52, but it's really not all that good. And then you get 56, a bull bar closing near its high. We have three good looking bull bars, 51, 53, and 56. The fact that they were, obviously 49 and 50 are much more dominant features than 3 good looking bull bars. However, the fact that we are getting reasonably strong bull closes tells me that the downside might end up being limited. But still, tight channel up from 51 to 56, but still always in short. And then 57, a bear bar closing near its low. You can sell 57. It's a reasonably tight channel, and you'd be selling for a second leg down. I don't know if you hold through all of this. You can probably hold through the first reversal on 59. But I don't know how much more there is to the downside in this area. So you could sell below 57 though. It's a higher high double top with 51, and when you get a higher high double top, you have to imagine that you're probably going to get a higher low before you get you're probably going to get a lower high before you get the full reversal down. So in general, that's why a lot of times selling a lower high double top is better because you don't necessarily have to get the higher low. But a lot of times when you sell and the second high goes above the first high, it's still a higher high, right? So you're probably gonna have to try and form some sort of lower high because the bulls are going to try to form some sort of higher low and get a bull trend and they want this to be the first leg up, pull back and complex second leg up. So they're hoping this is the first complex leg up. Yeah, 58 consecutive bear bars closing near their lows. Do you sell? I don't know. You probably can, but you're selling pretty low in what seems to me like a developing trading range. A reversal up 59, a bull bar closing near its high. It's a higher low for the bulls, but you're buying the middle of this developing tight trading range. So I don't want to buy in this area. It's not really worth doing. And we're staying below the moving average too, which is important. It would have been one thing had 58 been a little bigger, or 56 been a little bit bigger, or at 57 managed to close above the moving average, and then we started on the way down. It would be a little bit more bullish, but we're unable to get above the moving average here, which is a really glaring issue for the bulls. 60, a bear bar closing near its low. Are you selling below 60? I probably would not. It seems like a second leg down to me. And the traders who bought above 59 and are willing to scale in will probably make money, since this is a trading range day and it's a bull bar closing near its high. Even if you bought above 61 and got trapped, if you scaled in, you were able to make money. So you can see 61, a bull bar closing near its high, but now you're buying pretty much the exact middle. And ever since this bear surprise, bulls have not gotten to close above the moving average. 62, a bull bar, but tail on the top and a tail on the bottom. It's not able to close above the bar 61 high, so that's a bit disappointing for the bulls. It is consecutive bull bars, so probably buyers somewhere below scaling and lower, but I'm not sure. This should still get some sort of second leg sideways to down. I'm not really sure how much more to the upside or downside we're going to get. We're near the middle of the trading range on a trading range day, and it is Friday, so sometimes you get dramatic moves, but in general, to me, this just seems like it's going to be sideways. And this is, the breakout attempt by the bears, but limit order bulls stepped in and bought it up, and that's why we got such a big tail on 63. Yeah, it's still always in short, and we might go a little bit lower because it's still a bear surprise, but there's a huge tail on it, so it's not really great to just sell the close of 63. 64, it would be a low one short for the bears, but tail on the bottom, tail on the top. It's not really worth doing anything. What I would have preferred is to try and buy some sort of reversal up from the lower third in here. So had 63 closed in here, and then we got a good looking reversal bar. Then I thought that would be good for 10 to 15 points. Maybe just buy it back up into the upper third of the trading range and then take your profit. But bothersome that bulls couldn't get closes above the moving average. 65, a bear bar closing near its low. Good for the bears. We're probably going at least a little bit lower. How much lower? I don't know. I mean, this is the bottom of a bull spike, right? So spike and then channel. And this is the bottom of a bull spike. There's probably buyers somewhere in this range. 66, a doji bar. Again, we're still always in short, and it is a bear bar, but I'm not really willing to sell at this point. And then 67, more bear closes, but we're in it probably in the buy zone. Reversal up on 68. Do you buy above 68? I don't know. I think it's not the reversal that I wanted. I was probably looking more for a reversal up in this area, and 68 really isn't the reversal up that I wanted. So I would probably just let it go, but it's not the worst thing to buy above 68. 69, kind of disappointing follow through, but this is a pretty tight channel down, so that's probably going to happen. You can take the buy below 69, betting on a second leg up, and some traders are doing that. 70, you can see it's a bad low one short below 69. So the traders, some of them they'll buy more below 69, or some traders just buying below 69, trying to get a scalp out around the 69 close. 70, a bull bar closing near its high, but could be a second leg trap. I don't really know. I don't think this is going to turn into some massive buy the close rally. To me, you're buying at the middle of the trading range. So probably more of a profit taking area. We should at least get to the bar 61 high, since the bulls who bought above here, I suppose, they had a chance on 63 to get out, but I think it's reasonably possible we're going to get back up into this area. It is notable if you bought above 56, you could have used 58. If you bought above 59, you could have used 62, and if you bought above 61, you could have used 63. But it's still, this isn't disappointment really, so it's kind of hard to say that. You can see it's what the Bulls did. Maybe if they bought above 61, they're hoping 62 was going to be bigger, but it's not disappointing enough for me to think it justifies all of these Bulls dumping out of their longs. Not that this was a good buy, but what I'm saying is these traders, if they're scaling in, they still might be able to make money. So that's something to consider in this area where we ended up finding sellers 72, huge tail on 72 and middle of a trading range, maybe even upper third. You don't know where the low of the trading range is going to end up being. So that's kind of the guessing game. And you can see now it's clear where the upper and lower third is. So I'm only looking to buy reversals up from in here and sell reversals down from up here. And so you can see disappointment 73, huge bear bar closing near its low. But to me, this just looks like a trading range. Maybe 3 pushes down, 51, 63, 68. So maybe another reason to buy 68. And you can buy above 74, betting on this being a bear trap, and you want to get a bounce basically back to the 72 low. But if you're going to do that, it needs to go fast. It did what it needed to do, but it needs to go fast. We rally back to the bar 72 close where the Bulls who bought and they scaled in below the low. This is a prime example of why you can't buy this close and put a stop here, because this is what's going to happen. You're going to get stopped out and then it's going to go back, and that's trading ranges for you. So if you're going to buy up here, you need to be buying more down here and then using the rally, but that's hard to do. And then basically sideways the rest of the day. For the Bulls, for stop orders, I would say probably 12 is good. 18's maybe okay, but not ideal. This is good because everything's been above the moving average, so we're probably going at least a little bit higher. And buy the close. Probably buy the close up in here. Climactic though, maybe 39, 38, but I don't know. If you're long, it's okay to stay long, but I don't know if I'd be adding above 38. You could probably sell below 49, looking to close the gap. I would not do anything in here. You could sell 57, probably, but I would not do anything in this range for me personally. Maybe you could buy above 68, but it's not quite the reversal that I wanted. In 74, I suppose, but a tail on the top, so a bit disappointing. On the daily chart, we have a huge tail, so some sort of micro double top, and the neckline would be this low, but I don't really think it's worth selling down here. We're going to form the bottom of the trading range, and like I just said on the 5-minute chart, it's a bit of a guessing game as to where it's going to be. This is a really tight channel down, so on an even higher time frame like the weekly chart, it's a breakout, right? So this is going to get a second leg sideways to down from this whole channel. So even if we rally, we're going to get another leg down. So I don't know if this is the bottom of the trading range or if we're going to go lower. It's a pretty tight channel, but you can see on the weekly chart, there's going to be sellers above this high if we get there, and this is strong enough for a second leg down. So the question becomes, is this the first leg down and we pull back and then get a second leg down? Or is the first leg down going to continue and then we pull back and get a second leg down? The monthly chart is becoming important because we have 3 trading days left in the year. Bears want this to close on its low. They really, really want it to close on its low and form a really good looking bear bar. And then they can, look for some sort of strong move down. But if this closes as some sort of doji bar like this, it'll be a little bit disappointing. It's still not great for the Bulls, but it'll be a little bit disappointing. If this does close as a bear bar and then we start to rally early next month, look for us to get to around the June high and then for there to be sellers there. All right.